Hello and welcome to my Tips to Financial Independence channel. I hope you're enjoying the content. It's a joy to have you here. Please remember to like, share, and subscribe. Are you considering investing in real estate and are looking for more information? This video is for you. Please stay tuned until the end so that you don't miss important information. A lot of people choose to invest in real estate to achieve financial independence. Many have become millionaires with real estate investments. There are two types of real estate investing. Number one is residential. This covers your primary home, rental homes, and homes bought and sold for the purpose of making profit, also known as flipping. Number two is commercial. This refers to commercial properties such as strip malls, apartment, and office buildings. 5 pros of real estate investing. Number one, you can feel in control when you own the property compared to when you own a piece of a company as a shareholder. Number two, you can safely invest in real estate using debt with 20% down payment or less. Whereas buying stocks using a loan from a brokerage firm, also known as buying stocks on margin, can be extremely risky. Number three, real estate can serve as a hedge against inflation. As inflation rises, rental prices will increase, including home values. Number four, you can claim mortgage interest in your taxes up to $1 million of mortgage debt. Number five, you can avoid capital gains tax when you sell your principal residence for up to $250,000 net profit if single or $500,000 if married. The cons of real estate investing. Number one, when buying real estate, transaction costs for the property to close are high compared to buying stocks. Number two, real estate requires more work such as maintaining the property, handling leases, and collecting rent. None of this is necessary with stocks. Number three, real estate is expensive and it's not easily liquidated compared to stocks. Number four, it's harder to diversify a real estate portfolio unless you have a lot of money to buy different types of real estates in various locations. Getting a diversified stock portfolio does not require large sums of money. The risk of real estate investing. Number one, there is no guarantee that a real estate investment will appreciate. The market can be unpredictable, like in 2008. Number two, if you buy a real estate investment in a bad location, it can be hard to rent out. It's not possible to move a real estate property to a better location. You also cannot move real estate from abandoned office building or strip malls. Number three, high vacancies, increased maintenance costs, and costly financing can lead to negative cash flow from real estate investment. Number four, the property could have structural issues which are costly to fix. Number five, lack of easy liquidity can further worsen cash flow, leading to foreclosures and in other cases force one to file for bankruptcy. If you're interested in real estate investing, follow Bigger Pockets for more information on investing. You can find Bigger Pockets on YouTube, Facebook, or through their podcasts. I hope you found this information helpful as you plan to invest in real estate. Please remember to like, share, and subscribe for more content. Until next time, take care.